some people have been like, well, hey, isn't xstocks like STRCX competitive with what you guys are doing at Apex? And I'm like, well, no, we own a bunch. We're the largest holder of STRCX. We want it to do really well. So would love to kind of like address that dynamic as well. Maybe to start off, would just kind of love to hear about your, origin story getting into crypto.
Yeah, absolutely. Thanks, Parker. I mean, my origin story is actually pretty straightforward. I don't have a deep crypto background. I came on actually because of a relationship I had with Arjun, who's the CEO of Kraken. I've known him for 14, 15 years. He was actually an investor in my first company. And about a year and a half ago, he calls me up and starts talking about this sort of idea of tokenized equities, this concept that had sort of been tried before, but he thought that there was a sort of a shift in the market with regards to RWAs and tokenization more broadly. And he wanted to explore tokenized equities. And tokenized equities for me was something that was immediately interesting because the concept itself is actually really simple. At least in the way that xStocks does it, you have a token that is backed one to one by an underlying equity. So for every Tesla X token, you have one share of Tesla. And to me, the product was incredibly simple. And that was the sort of product that I wanted to see in the market because now it allows you to bring on people who are maybe interested in crypto, but sort of scared of a lot of the FUD that goes along with crypto. A product like that, almost everyone worldwide understands what an equity is and what a stock certificate is. To be able to say this token is represented by this underlying equity was very simple. And so I thought as the sort of product that has real mass appeal and would sort of be an on-ramp for people into crypto more broadly.
Yeah, that's cool. What are you like? Why, from your perspective, why did it fail in the past, and why do you think it's finally now this whole RWA narrative kind of catching on?
Yeah, it's a good question. I mean, RWAs, there are just many different flavors of RWAs. And that flavor, that product composition really, really matters a lot. If you look at how it's done in the past, in many cases, it was done sort of very synthetically, maybe much more similar to, a CFD or some sort of synthetic derivative. It was very important to me that with what we're doing, at least from a RWA standpoint, is that there is underlying that is matched to the product that clients, retail, institutional, are actually holding. And so I think that is sort of a very important aspect. When you look at something like xStocks, it's more akin to an IOU or a debt instrument than it is to a derivative because you have the token or the underlying asset is placed with a registered custodian. It's placed in an SPV. It's pledged to the token itself, and it's managed by a third party. I think that sort of structure can provide real credibility to the token and then can really account for like any sort of downside scenarios that might happen, which hopefully will never happen. But token holders will be made whole. And that I think is very important.
Yeah, that is, I certainly think that's important, especially, hopefully you don't have any bankruptcy type scenarios with some of the issuers. But as you kind of move further down, like you could get into some kind of hairier situations with some of the, different issuers, some of the actually stock certificates themselves. And so, all the details start to matter when things go wrong. So I think that'll be really important for larger players as they want to get involved. I'd love to hear your thoughts on, what's kind of the target audience for X stocks? Like, who are the people that you guys have seen buying it? What are kind of the archetypes there?
Yeah, it's a really great question. xStocks, really when we started it with like really a retail focus, a retail mind. When you think about xStocks and from a philosophy standpoint, why we did xStocks, we did it to enable access, right? I think that's actually one of the ethos of crypto more broadly. You want to give people access to participate in financial markets, people that maybe haven't been able to participate traditionally. And so when we started at Stocks, it was really how do we give an international audience, people in Africa, in APAC, in Latin America, that maybe have a much harder time getting access to first US equities? How do we get them access to US equities? So that's how it started. And you can see that just based on the sort of metrics that we have with xStocks. When you look at xStocks as a product, I think we have roughly 120,000 token holders, which is the most out of any of the RWA products out there. Trading volume is very, very high. And so that's something that is really powered by retail. Increasingly, we've been working with more insto and institutional clients, people like yourselves, APYX, who are now looking at stocks as a way to help manage their treasury, help increase their yields, help engage and actually do more things on chain, which a lot of traditional institutions just don't have the capability of doing. And so we've started to shift more and more towards institutional clients. We want to, of course, support both, but that's sort of been the shift over the last 3 to 6 months or so.
Yeah, it's kind of, I don't know, it seems like a super interesting unlock looking at the RWA space, and you're seeing a lot of these assets that are seeing a lot of this crypto institutional adoption and kind of being used as a building block. And what's pretty cool is, on the Apex side, we obviously had to open brokerage accounts and do all that
Hmm.
stuff. And the STRCX liquidity is not quite there for our needs yet. We're, the largest holder of STRC, so buying a lot. But you could envision a world, let's say in the next 6, 12 months, or maybe a little longer, once liquidity is better on some of these names, where someone could replicate what we've done at Apex without brokerage accounts. They could just create a token and it could actually just be all programmatic, like a smart contract that just accepts USDC and then turns around and buys STRCX on chain. And then there's like a dashboard, which I think that's super powerful, where you've today got a lot of these RWA issuers that have to kind of deal with the bridging, and there's a lot of friction there and a lot of costs there. But in the future, with you guys just bringing all the assets, all the RWAs on chain, and I assume you're going to expand beyond just, simple US equities, but once all these assets are on chain, projects can create all sorts of different flavors of risk and return. I think that's the super powerful thing is today you may have, 5 discrete permutations of exposure to a given theme or asset, I'm making the number 5 up. But in the future, you might have 5,000 permutations, and it could be tailored to different risk return profiles. So there's just a bunch of interesting things that you can do once you get on chain and have these traditional assets as additional Lego pieces in the Lego box to build something, which I don't know, I think is super cool and, just expands the use cases for DeFi.
I think you completely nailed it. On actually two cases. One, certainly on looking at these assets once they're on chain and the sort of composability that you start to have, and you start to be able to build these, build it into the smart contract, build it into the primitive, so that this happens automatically, and you're basically building little, in you guys' case, like little yield engines to do very unique things. That is awesome and incredible. But to your point, we need the liquidity. And that is maybe the hardest part about bootstrapping something like an xStocks, where we started with these tokenized equities. Getting liquidity for these products is probably where I spend the majority of my time, because you need to get a certain amount of liquidity for these to flow freely. And that is one of the sort of big unlocks. I think a lot of people go into tokenization, and frankly, I still get pitched this all the time, where there's sort of some sort of product that they want to tokenize that is very, very illiquid. Like, oh, let's tokenize it. Let's put it on chain. It's going to free up a bunch of liquidity. Liquidity is going to flow in, then it's going to be traded really easily, whatever. No, like tokenization does not beget liquidity in and of itself. That is like one of the really big misconceptions that still sort of happens even in people that have been in crypto for a long time. And so figuring out how to find and get and support liquidity is important, because even though bootstrapping liquidity initially is very hard, once you do have liquidity, then you start to have a little bit of a self-perpetuating cycle of increased liquidity. And that's where things get really, really interesting. It's just that initial bootstrap that's really challenging.
Yeah, for sure. And we should chat after this. We might have some ideas on how we can at least bootstrap liquidity on STRCX, and
Let's
maybe
do it.
maybe SATA X if you guys can swing it as well. Well, cool. Yeah, I think it is, and I do think that was kind of the initial problem. I remember back in 2018 getting into crypto, and everyone was talking about STOs, right?
Yeah.
Stock token offerings instead of the ICO, and it never took off. And I do think liquidity was the big one of the big barriers. Obviously, there was kind of the regulatory stuff, and you're trying to get everyone to like KYC before they could touch the token, and that created all sorts of frictions. But you're absolutely right that it's not a build it and they will come. Like there's you can look on CoinMarketCap and there's thousands of tokens, but actually there's billions of tokens out there. Most of them have zero market, were just made as a toy, as a test, whatever, right? There's probably like, I don't know, tens of thousands of FUBAR tokens, like dev test token, right? Like just because there's a token doesn't mean people magically start trading it. But I think that's also an incredible advantage because once you kind of can cross the chasm and create that liquidity, it's pretty hard to follow, right? Like liquidity is truly a moat. I'd love to hear from your perspective, like as you guys get liquidity going in more of these assets, obviously Apex is built partly on top of STRCX, but what are some other interesting either single name projects or themes that you're seeing emerge building on top of xStocks or maybe even RWAs in general if you want?
Yeah, so it's a great question. Well, I mean, I think that there is broadly a search for yield. I mean, you look at why STRC is so popular. You have this, variable yield. It's historically been between like 9.5 and 11.5%. Very tax efficient, and it's sort of popped off because of that. There are many other ways to drive yield, and almost every interesting project that we've seen has been tied around creating different buckets of yield using different risk categories. That just seems to be where everyone's going. I mean, there's like individual names where people are buying and holding individual stocks because they want the price appreciation. I think there's speculation, and that's all good and fine. But the most interesting projects, the ones that have gotten the most traction, are really just trying to figure out how to generate more yield. And it could be everything from projects that are taking advantage of borrow lend, even holding your S&P 500 and then putting it into something like a Camino borrow lend protocol and being able to generate yield on that. It could be things like vaulting. All of it is just tied to driving more yield. Those are the projects that so far we've seen as being the most interesting. And then going back to a previous question, when we talk about who are the sort of clients for these RWAs, for these tokenized equities, actually on the other side, the people that want to tokenize, it's the same sort of institutional customers that today in the traditional markets have ETFs or private credit funds that are creating yield in the traditional markets, now see the benefits and are trying to come into crypto markets and help create yield here. And so like that's all just coalescing around this same strategy around like how do we drive more yield? That's like frankly all that matters with these financial instruments.
Is the yield. Yeah, very interesting. Yeah, I think it's the other fascinating thing about it. We were talking to, and I actually interviewed on the Apyx Alpha show, Hisashi, one of our partners in Japan. But the really interesting thing here is it creates a global market for yield. It creates a global interest rate. So today you've got like US interest rates and EU interest rates and Japanese interest rates. And sometimes there are giant differentials. But, if you have a wallet, you've got a Soulflare wallet, you got a Phantom wallet, you got a MetaMask, like you're a citizen in the global crypto economy and there's one interest rate. And sure, there's different platforms and these rates might vary a little bit, but everyone has access to everything, maybe unless you're like using a North Korean address or something. And so, I think that's pretty fascinating because it really changes the calculus around access to money, access to yield that, maybe didn't really exist before.
It's interesting because I think a lot of we just because a lot of the team is based in the US, we talked to a lot of the traditional US players that are helping create yield products, the real traditional guys, like New York based traditional guys. And a lot of the conversations we're having are they're trying to propose some sort of product and they're like, oh, we think we can generate this amount of yield. And we're like, guys, this is actually not competitive in crypto. Like crypto doesn't care about 3.5%. It's just it's not, it doesn't do anything for anyone. There's dozens of products in crypto that do multiples of that. And so it really shows you how global the market has become. And Like that is a really massive benefit for, the retail crypto users, because now they have literally access to the best of the best. And it's only going to continue improving. Like the competitive nature of it and the competitive nature to want to access the capital that crypto represents as it continues to grow means that things like these rates will continue improving. That's the hope anyways.
Yeah, for sure. Yeah, I mean the holy grail of crypto was always a level playing field, like egalitarian access to anything.
Hmm.
So whether you're a giant whale or you're, a tiny minnow and you've got $100, like you have the same access, the same opportunities as everyone, which is kind of the antithesis of traditional finance. Like, you go to New York and there's all these tiers of like the more you have, the more plugged in you are, the better deals you get. And like it's just effectively the bigger taking advantage of the smaller who take advantage of the even smaller all the way down. And that's just not a world that, I think should continue. I think it's morally corrupt. And so, very excited to help create this world on chain where it's at the level playing field, it's flat. And there's still some advantage to being, mega large, but really not much. And I think that you see that evidenced in, whenever there's a big move down, small guys blow up and big guys blow up. Everyone kind of, the same.
It is interesting because the sort of globalization of these products is, I think, a net benefit, but it also makes it challenging, and it increases the level of understanding that the average user has to have to know what risk they're taking on. And
That's
so it's
fair.
definitely a double-sided coin. And I think that is, we want to give people as much choice and access as possible, but it comes with responsibilities as well. Do your own research. It's like a meme saying for a reason, but it's true. And so I think that is an important aspect of the democratization of financial markets.
Sure. Yeah, I mean that's always the the two-edged sword, right? Freedom versus security. But I think the cool thing here is, and you've seen this develop in crypto around lending markets, the whole, vault and curator concept where you've got all these markets and you're like, all right, there are like hundreds of markets that I can lend my USDC into. Like, I don't know which ones are good, which ones are going to blow up. What do I do? Oh, I'm just going to put my money into a vault and it's labeled as a conservative vault. And so they're only going to touch these markets and they've got automations on it and they manage, billions of dollars. And so I think it's pretty cool the growth in the, I would say, like management and curation industry as well around this, where as you have more and more products, you also have some aggregation layers that are developing, some simplification layers. In the same way that, in TradFi, like, yeah, anyone can open well, at least in the US, anyone can open a Schwab account or an Interactive Brokers account and go crazy with all this stuff. But most people don't want to do that. So most people like hire a financial advisor and just like pay them 1% a year or 0.5% a year and just like, hey, take care of it all.
Yes.
Maybe we'll start to see like it'll look a little different because it's on in crypto, but like you'll start to see maybe more like personal financial advisors on chain. These vaults are like an investment manager, which is one layer below an
Hmm.
advisor. I actually worked at an advisor prior to getting into crypto, institutional, but advisor nonetheless. And so I think you're going to see this, and it's kind of the arc of crypto is just like speed running TradFi innovation and development, like at 10x speed or whatever. So I assume you'll see the rise of more investment managers and even investment advisors as the access to instruments proliferates.
Yeah, I 100% agree. What that actually ends up looking like, we'll see. But totally agree with you that like there's going to be some sort of concept of curation, advising for people that are just trying to they're trying to live their lives. They don't want to spend their days researching and going deep, but they want to take advantage of now this global pool of products that are available to them.
Yeah, it's interesting to think about like in the future. Do we have the ETFs get tokenized, or do we just create ETFs on chain that use the tokenized assets underneath? I don't know. Which one wins?
This is a tough question for me to answer because we just tokenized some ETFs for Franklin Templeton. I think we announced it yesterday, but we've had, so I think that's going to continue. That's going to continue happening, and that's sort of like they're creating these like themed ETFs, and that is a it's sort of a type of, maybe not advisor, but like fund manager that you can look at and say, hey, I trust Franklin Templeton, and so I'm going to trust this ETF. But to your point, we're having the same conversations where people are creating these, these ETFs using the underlying directly because you can. Why wouldn't you? You can build it so it has automatic rebasing and does certain things with dividends and so on. And so, absolutely, there's no reason why that couldn't happen, and that's what the technology actually enables.
Yeah, it's interesting thinking about, obviously we've seen the memory stocks and the semis just like really ripping in the last couple weeks. And, there's the DRAM ETF that's just like absolutely taken off. But, it takes a little time to get an ETF listed. And so it doesn't actually take time to like create a token ETF, or not an ETF, but like a token wrapper, right? And so you might see a situation where on chain, people launch these wrappers much quicker. Takes like, I'm sure Claude Codes very soon can one shot it, and I'm sure there'll be platforms for creating these wrappers too. And then it's like, okay, if you're an issuer, if you're Franklin Templeton, do you want to wait 45 days for the SEC to review everything and get lawyers involved? And by the time maybe you've missed the trend, or do you just, Franklin Templeton maybe just goes directly on chain and says, yep, we launched the token. It took us a couple days. And like the TradFi guys actually become the issuers because they have the brand, they have the trust, but
Yep.
they just like
Yep.
bypass the whole, create ETF and then issue on chain. They just issue straight on chain. I don't know.
Yeah, they could totally do that. It actually gets into a whole rabbit hole around regulation, and for these traditional guys, how are they regulated? Where they're regulated? You look at something like xStocks today. It's a product that is available outside the U.S., highly regulated. In Europe, available under MiFID II, in other markets available under different regulatory regimes, not available in the US today because the SEC says not yet. And so we hope it will be very, very soon. But regulation is still interesting in crypto because, on chain in DeFi, it doesn't really matter where you are, but governments still want to have control. And it's like this battle between people's desire to be free and government's desire to control, maybe to put it positively, they want to protect people from themselves in some way, but like not everyone wants that. And so like
Sure.
it's a lot of tension there.
Yeah, it's an interesting parallel to just, the internet in general and information flow, where in the early
Yeah.
days, like, cryptography was labeled as like a weapon and like there were
Hmm.
export controls on it, but it's like, yeah, but you can just like send this on the internet. And so, at some point you basically have to, it's really tough to stay in the middle. You either have to go full draconian, shut off the internet, pull a North Korea or maybe like I don't know. China can't even really do it. You got to pull a full North Korea, like no more internet, or like you really have to be thoughtful about how you, try to protect effectively. If if the goal really is to protect, because it's really difficult to block off access. But at the same time, yeah, there's lots of bad actors and protection is needed. And look, I'm sure the SEC got a lot of heat when FTX blew up for not doing anything. So, I understand that. But thankfully, there's lots of tools, I think, to also protect people and I guess have more of an opt-in to protection versus an opt-out type situation, which is what we have today.
Yeah, totally.
Well, I know we're kind of getting here on time. Val, would love to just any last things you want to say to the audience here, the Apex audience, and then we can wrap up.
Yeah, I mean, the big thing is, at least from selfishly from an X stock standpoint, we're definitely not, we're definitely not stopping. When you think about how we continue to provide access. Today we started with US equities. Tomorrow we'll have international equities. After that, we'll have other products, commodities on chain, right? You take your token and you can go redeem it for a bar. Stuff like that, I think, is going to continue to be super, super interesting because the whole point is like more access and access to different type of assets. And so as we continue to expand out, just keep an eye on the space because we plan on pushing pretty hard.